Hello and welcome to a brand new episode of ET Markets Trade Talk, a show where we talk about trading strategy, market outlook, as well as risk management practices of a trader. Well, my name is Shatajan, and today we have with us a very special guest, Puneet Tewani, who is a founder and CEO of Fox Trading Solutions. Welcome to the show, Puneet.
Thank you. Thank you, Shita sir.
Well, thank you for being part of the show. Now, Puneet, before we go ahead and discuss about the trading strategy, tell us a little bit about your journey into markets.
So I started my journey back in 2010,
Mhm.
when I was in my college days. So initial college days. So I started then and there, and the journey started when I saw my father trading stocks.
Okay.
Means he used to apply for IPOs and all those things.
Mm.
So I just decided like this is going to make money, and the agenda for me was making money. So I just went in, opened an account with Angel
Mm.
Broking. So that was the first trading account I opened, and then slowly and gradually I thought like I'll make a fortune in this.
Uh-huh.
And so in engineering days, I was mostly trading on stocks. Particularly, I started with Coal India. That was
Mhm.
my first stock. Uh, on that particular day, I started, and slowly and gradually I built my portfolio, and then I thought like I'll explore derivatives. So
Mm.
came to like something about derivatives, and then I did PGTM and finance to learn more
Okay.
about it. And then going forward, I just joined a firm, trading firm, Mansuk Securities. I was pretty clear like I'll join only a trading firm after completing my post graduation. So I joined that and then started trading onto the ratio spreads,
Mm.
butterflies, and all those things. And from there, the journey is actually still going on.
No, absolutely. In fact, you founded Fox Trading Solution recently. So tell us how many clients are you managing and the AUM, and we'll discuss about the strategy later. Definitely.
So in terms of client base, we have a small client base, almost
Mhm.
like 50 plus clients,
Okay.
and we are managing around 67 crores on funds
Mhm.
as of now.
Great. Now, please, give us one trading strategy for our viewers. You can also mention the initial investment that is required, risk profile, as well as the time horizon.
Sure. So the trading strategies which I follow are mostly time based and
Mhm.
based on the directions.
Okay.
So if I want to share one of my strategy, that could be rolling straddles.
Mhm.
So that is what I do personally, and with a decent fund size. So rolling straddle means straddle is just like shorting ATM call and put option.
Mhm.
And rolling straddle particularly means once we have shorted that particular straddle, the ATM call and put, what we'll do, we'll put up a stop loss. And what we'll do whenever the market moves either or in the either direction, maybe on the upside or maybe on the downside,
Okay.
what we'll do is we'll shift it upwards and downwards. So that is particularly rolling straddle. How we do it is we put up a stop loss of 70% on each leg. And whenever the stop loss is hit, what we do is we square off both the legs, the call and put,
Mhm.
and we shift it to the nearest ATM. And we particularly do it 3 times in a day.
Okay.
And the allocation for the strategy is higher on the most prominent theater DK days, maybe
Mhm.
Tuesday, Wednesday, Thursday is what we trade it on mostly. And the allocation for this on Monday and Friday is significantly on a lower side.
Okay.
So that is what we do. And apart from that, what we do is once the straddle is re-executed 3 times,
Mhm.
so we assume that the direction is clear. And then what we do is we put a simple 920 straddle type of strategy after that. So just with the notion that the direction is clear now,
Mhm.
and we can capture the trend after this.
Right. Uh, would you be able to explain it on the chart or with any software that would be helpful for the viewers as well?
Sure, I'll open up Paint. Just give
Okay.
me one sec. The screen is visible, right?
Yes, yes, absolutely. Yeah.
So short. Maybe the timing could be 9:16.
Mhm.
And whenever
That's
the
a
market,
beginning of the trade,
yes,
beginning of the opening, beginning of the trading session, 9:16.
beginning of the trade. And if the market is moving up, what we
Mhm.
will do is SL for the call side is 70% of
Okay.
the premium,
Mhm.
and same is the case with put.
Okay. 70% is the stop loss.
Uh,
I mean,
70%
70%. Sure. ठीक है.
So 70, and then if either of the premium gets hit,
Mhm.
uh, of all the positions, all the
Okay.
legs is, I can
So
say,
either call or put.
the call.
Okay. Either call or put. Okay.
And then repeat the process
Mhm.
twice more. So once we have already done, means this was the first entry at 9:16.
Right.
So if once the premium is hit,
Mhm.
either on the call side or on the put side,
Mhm.
we'll square off the positions and we'll re-enter 2 times more. We'll
Gotcha.
follow the same process. And if this is done, what we'll do next is we'll enter short straddle once again
Mhm.
with SL of 20% each leg.
Okay.
So, sorry, this is what we do. So the capital involved would be around 2 lakhs. The max drawdown for this is around 8%.
Mhm.
And the returns is what you can expect is around 65-70% on a yearly basis in backtest. And
Okay.
in real, if you go for the execution, in real, maybe around 40-45% is what you can achieve on a yearly basis using this strategy.
Okay. And that is only for the uptrending market, Puneet?
So this could be either on the call side, either on the put side. So if it's even if it's like if the stop loss of the call side is at the first instance,
Uh-huh.
so it is not the case like second time also we'll wait for the call stop loss to get it.
Mm.
Put can
Mm.
also get hit. So
Right.
this is for both the markets. So what we are trying to do is we are trying to get the benefit of the theta at the first instance,
Mhm.
and then if the market moves in either direction, what
Mm.
we'll do is we'll just try to initiate a trend-based strategy.
Right. Also, one more thing. Once the stop loss got hit, we've squared off the positions, and then we've repeated the process twice. Now, probably our viewers would want to know that in the first instance we did it on what 9:16. Now, for the other two instances, is there a time frame involved in it?
No, as soon as the stop loss is hit, we'll try to re-enter. So that
Okay.
is the rolling process. So once the stop loss is hit, maybe at 9:20, maybe at 10, maybe never.
Uh-huh.
So what we will try to do is once the stop loss is hit on either leg, either on the call side, on the put side,
Okay.
what we'll do is we'll exit that particular position then and there, and we'll reinitiate that at that particular time, whatever would be the ATM at that point in time, maybe
Mm.
40,000 would be the ATM at 9:60.
Mhm.
And whenever the stop loss is hit, the ATM would be 40,100. So at that point in time, what we'll do is we'll select the 40,100 call and put, and
Okay.
we'll repeat the process.
Right. And at that point in time, the stop loss is 20%.
So at the first instance, we'll keep a stop loss of 70% of the premium each
No,
leg. Second
the
one,
repeat when we are repeating the process.
whenever we are repeating the process 2 times, we'll do the same thing, 70% of the premium.
Okay. Okay.
Twice, we'll repeat the process. Once we are clear with the direction,
Uh-huh.
what we'll do a short straddle once again, but with a 20% stop loss on
Okay.
each leg.
Oh, right. 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 So, so the initial capital that you said is around about 2 lakhs.
Right.
And who basically the risk profile of the investor who should actually go for this strategy?
This is on risky side. So risky in the sense moderate risky side. So
Mhm.
whosoever wants means a decent return can go for it. Uh, I am particularly on a conservative side, so I just particularly aim for like 2-3% a month. And for me, this strategy is on a risky side. For someone who wants like 50% returns on an yearly basis, for
Right.
him, he would be comfortable using this particular strategy.
Right. And one more thing, can this be executed on expiry days as well, all days, or should one make an exception?
So particularly on expiry date, this works wonders. And Tuesday and Wednesday, we can also go for that. So Tuesdays and Wednesdays, we can give a certain small allocation to this.
Mhm.
On Thursday, this would work wonders.
Right. So expiry as well as Tuesday and Wednesday are the, you could say three prominent days where this strategy can be executed, right?
Right.
Right. Not a problem. Right. Well, on that note, thank you so much for your time, Puneet. And that's all for now. But do stay logged on to Eating Markets for more on news, business, and economy. Again, thank you so much for your time.